Hey everyone, welcome back to UJXanti. In this series of videos, we are going to understand whether we are in 2019 or 2021 type rally. As you can see, we had a big rally in 2019, and then after that, we had a short-lived recession which lasted a couple of weeks, and after that, we had the parabolic rally. Two different rallies, and actually, there are more than 10 differences, and in this series, we are going to pay attention to all of the major ones. And the videos, the ideas of this series are partially inspired by Benjamin Cohen. The link to his channel will be in the description, so you can check out his content. In today's video, we are going to discuss the effect of gold breakout on Bitcoin's price. Gold breakout happened in 2019 and also a couple of months ago in 2024. However, before we start the topic, let's put things into context. Based on the short history of Bitcoin, we can differentiate two types of rallies: bear market and bull market rallies. The latter is also called parabolic rally. And the best examples of those can be seen from the last cycle. And in the last cycle, we experienced both of those actually. Another interesting thing is that in the last cycle, we also experienced a recession, which was, of course, Black Swan. Let's concentrate on the last cycle. We had bear market rally in 2019. Here we can see it. And after that, we had the parabolic rally or bull market rally. Among the big differences between these two types of rallies is that Bitcoin dominance goes up when we are in a bear market rally. However, Bitcoin dominance goes down when we enter into the parabolic rally. To put this simply, it means that Bitcoin outperforms the general altcoin market when we are in a bear market rally. However, altcoins as a whole market, not specific altcoins, the market of altcoins starts to outperform Bitcoin when we enter into a parabolic rally. And this can be seen from the chart of Bitcoin dominance. Let's overlay it here. So let's get rid of the drawings. As can be seen, here when we entered into 2019, let's change the color. So we already have red here. Let's have white. So when we entered into the bear market rally of 2019, Bitcoin dominance went up. However, it's not the case with 2021 rally. At first, Bitcoin dominance was stagnant. It moved a little bit down, then up. Actually, we had, our all-time high was not in April, it was November. So let's put it there. We can see that, at first it went down, then up. So it was sideways action, more or less. However, a substantial drop followed. So we see that here Bitcoin's price goes up and Bitcoin's dominance goes up. However, here it's not the case. Bitcoin's price goes up. However, we have decreased Bitcoin dominance, which in simple terms means altcoins as a whole market outperform Bitcoin. There are many reasons that we can explain this difference as well. So let's not dig into those details. The main difference is risk on and risk off environments, as BTC is considered to be safer crypto asset than altcoins. Whenever the environment is risk on, people move their money into risky altcoins. However, when the environment becomes risk off, people tend to move their capital into Bitcoin. The goal of this series is to look on various indicators and data points so that we can identify whether we are in a bear market rally or a parabolic rally, something that we can analogously say 2019 type rally or 2021 type rally. In today's video, we are going to start with gold, more specifically the breakout of gold. Let's actually go to gold chart. Gold is actually not the most appealing investment for most of us. However, it can convey some deep messages. And it's not only for crypto market, of course, it's for almost all financial markets. So gold is a barometer for bond investors, equity investors, as well as for us, crypto investors. Now let's go back to times when Bitcoin didn't exist. Let's start with S&P 500, which is the biggest equity index that we have. If we go back in history, let's overlay S&P 500. Here, an interesting thing occurred. Basically, let's change the color of the trend line. We had a support and resistance zones for gold. And it was not it was not multi-month or even multi-year. It was multi-decade resistance zone. We had our all-time high in 1980. And after that, after 27 years, gold price broke out finally from this horizontal resistance zone. What does that mean? What does that mean? So gold broke out. Basically, it means that a lot of people buy gold. That's why the price goes up. And to break this kind of resistance zone, you need a lot of demand. And it happened because a lot of big investors, institutional investors, understand that the environment is risky and they move their capital from risk assets, namely equities, into gold to preserve their purchasing power. And as can be seen from this chart, if you saw the breakout of the gold and understood that it was a major signal that the environment switches from risk on to risk off, you could sell your equities here. And this is the S&P 500 chart in the orange lines. As you can see, the breakout of the gold, if we go closer, the breakout of the gold this is the monthly candle. Let's be precise. Yeah. Here it is. So September or August. Yeah, it's, I guess, August of 2007. That was precisely when S&P 500 topped, and it was precisely when the meltdown or the great financial crisis started. This was a major signal. So the breakout of gold was a major signal. And most of the participants ignored, of course, and it didn't end well. When gold breaks out this kind of major multi-year or multi-decade resistance zone, it is a signal that you don't want to ignore. If you saw this signal and acted accordingly by moving out your capital from equity markets or taking profit, you would avoid 50% correction in your portfolio and you would avoid the great financial crisis. Now coming back to Bitcoin. So this is just before Bitcoin even went live. So we didn't have Bitcoin here in 2007. Let's get rid of this. And when we come back to Bitcoin's chart. The history is short, of course. However, we had two instances when gold broke out. This is not gold's chart. Let's go to gold's chart actually and overlay Bitcoin there. It will be easier to see. Let's put monthly candles and let's overlay BTC. Let's put logarithmic. Let's go to the last cycle. The year is 2019. As can be seen, if we drop Bitcoin for once, let's just start with gold. It will be easier to see. Gold had a multi-year resistance zone. We had a small fake out here. I mean, it's only 1 or 2 percentage points, so it's a very small one. And this one is another maybe fake out. You can consider it a fake out or not. I mean, you can start this trend line only after that. However, we had a couple of years of resistance in this zone. It was $1,365 approximately. And we couldn't pass this point for multiple years. We tried many times, but the demand for gold was not enough to push the prices higher than this level. However, we can see that in June of 2019, we were able to pass this zone. Gold broke out from this multi-year resistance zone. And what could be the reason? Presumably, we can say that the reason was yield curve inversion. In basic terms, yeah, this is the 10-year and 3-month treasury yield curve. In simple terms, the longer the treasury, the higher the interest rate should be because you take on more risk, so you should be compensated with higher interest rates. And rarely it happens that short-term treasuries give higher yields than long. Here we can see 10-year and 3 months. This is 2019, and the yield curve inverted in May. In this small region, when we have negative yield curve or inverted yield curve, for this short period of time, for a couple of months, 3-month treasury bonds, treasury notes, they provided higher interest rates than 10-year treasuries, which is very rare and it shouldn't happen in normal and efficient markets environments. And now let's overlay Bitcoin's price so that we can see the breakout of gold and compare it with Bitcoin's price. Here we can see that Bitcoin had its 2019 bear market rally. Here, this was the 2019 bear market rally. And let's now get rid of this. And if we go to daily chart, because we don't want to see only weekly closes, here we have the daily chart for gold and Bitcoin. We can see that breakout happened on 20th of June 2019, and only after 6 days, Bitcoin put its local top. So it was less than a week apart. These two events happened only 6 days apart. If we look back into the chain of actions, at first, we can see that in May, the yield curve, 10-year and 3-month treasury yield curve inverted, which is a big signal for investors that the economy is probably headed for a recession. And that was the time exactly that we started to see big demand for gold. So the prices started to soar. And only after 4 weeks, we had gold breaking out of this resistance zone, which was a major signal. If gold came and it was another resistance and it couldn't go up and break this, that would not be a big signal. But when it breaks up, it means that it's a big signal for it indicates that the environment switches from risk on to risk off. And again, it was the local top for Bitcoin. It became risk off and people started to sell Bitcoin. The demand went down and we had a 50% correction after that. If you look Bitcoin's price, you will know that here, even before COVID pandemic started, we had 54% drawdown. We don't include the black swan of pandemic. No, we just say that after gold breakout in 2019, Bitcoin cooled off and it went to have a 6 months correction period, which resulted in 54% drawdown. Now let's come to today's environment. In 2024, here, let's again start with gold, with the same way that we did in 2019's case. Here, we had another similar thing. As you can see, we had our all-time high in 2020, and then that specific price target became a resistance zone for gold. We couldn't pass this zone. We tried a couple of times, but again, it was a big resistance zone, and we needed huge demand for it to break it up. And again, it happened. Of course, inevitably, the prices will go up because it's not gold appreciating with respect to USD, it's USD depreciating with respect to gold. It means that the prices would inevitably break up this resistance zone, and it happened this year. Let's close up. Again, it's a daily chart. We have a lot of candles. That's just for precision. Let's now overlay Bitcoin. We see something similar, I guess. We had gold breaking out of this resistance zone, and it was the 1st of March, yeah, the 1st of March of this year. And then after 13-14 days, so only after 2 weeks later, we had Bitcoin putting its local high, which was close to $74,000, and it was the new all-time high, of course. And this is another signal that gold gives to the investors, that the environment for risk assets switches from risk on to risk off. Bitcoin, of course, was resilient. We didn't see 50% correction yet. However, we can note that the rally cooled off. We didn't continue to put new all-time highs after gold breaking out. And then we can also note that Bitcoin is now trading 16% off of its highs, which is not comparable with 50% drawdown that we had in 2019, but it's significant. We not only cooled off, but we also corrected for 16%. However, we can also note that we may have more months coming that we will have more corrections. It's not going to be precisely 50% like in 2019, but it seems that the rally cooled off, and it seems that today's environment, by the way, this is the yield curve of its 10-year and 2-year, and we can see that it's inverted for more than a year. Actually, it inverted in July of 2022, and this is one of the longest yield curve inversions of the history. And we can also have a look at 10-year and 3-month. Let's put 5-year. Yeah, it's also inverted starting from October of 2022. Again, the story is similar. Yield curve inverts. It signals institutional big investors that the environment is not risk on and it switches to risk off. And then gold rallies, of course. People move their assets, their capital into gold. And whenever there is high demand for gold, of course, it will break out of this zone. And when it breaks out, it's a signal that the environment changed from risk on to risk off. We can see that Bitcoin didn't put a new high after this breakout. It did for the first couple of days, but after that, the rally cooled off, and we are now 16% off the highs. Until now, 6 months passed from this point, from the breakout of gold, and Bitcoin still is in correction. So it's not a severe correction, but still it's not a rally, it's a correction. And all this story, the inversion of yield curve, then gold breaking out, and then rally cooling off and going into a correction, resembles more with 2019, not with 2021. Let's go to weekly because we have a lot of data points. All these conditions that we spoke, yield curve inversion and then gold breaking out, resembles with 2019, which was a bear market rally, which was not sustainable, and after which we didn't go to parabolic rally immediately. We had a 50% drawdown, and only after that we moved on to have our parabolic rally. And altcoins thrive during this type of rallies, during parabolic rallies. They can, of course, go up in value in USD terms in bear market rallies. However, in BTC terms, they will go down. Most of them will go down. And today's environment, the rally that started in 2023, more than a year ago, resembles more with 2019 when we view it from the perspective of gold breaking out and yield curve inversion. We can conclude that from the perspective of gold breaking out, this rally that we have in the last year or so resembles more with 2019. So first we had yield curve inversion in both of the scenarios in 2019 and 2024. Of course, we had yield curve inversion more than a year ago in 2022. But yeah, first we have yield curve inversion, then gold breaks out of its multi-year resistance zone. And whenever it breaks out of that resistance zone, it means that it signals that the environment switches from risk on to risk off, specifically for risk assets. And crypto is, of course, a risk asset, one of the riskiest risk assets. And we can see that at least until now, the story is almost identical. We had our local top of 2019 rally only 6 days after the gold breakout. And here in 2024, we had our local high, which was the new all-time high, of course, 74K, only 2 weeks after the gold breakout. And after that, the rally cooled off in 2019, and we had a 54% correction for 6 months in total. Now it's already 4 months that gold broke out of its resistance. However, we are only 16% off of the highs. And that's what gold breakout suggests us. It just tells us that we are more likely to be in a 2019 type scenario, like a bear market rally, than to be in a 2021 type rally. Of course, we cannot just look at gold's price and its breakout and conclude that it's enough for us to be sure that we are in a bear market rally. We need to look into other factors, and we are going to do exactly that in the upcoming videos. If you like this type of content, please like and subscribe so that you can see our upcoming videos. Thank you for watching, and I'll see you next time.